Hello guys, welcome back again. So in today's video, I'm going to be explaining Forex profitability and expectation for retail traders. Now, especially for new traders, they always have these questions they ask: how much can I invest in Forex trading as a beginner? Can I trade with $100? Can I trade with $50? Can I trade with $200? And how much am I going to make? And what is the period of time I can make that money? Okay, all these questions are being asked especially by new Forex traders. So this video, I'm going to break down your expectation, realistic expectation as a Forex retail trader and the profitability side of it, what you should expect. So if you are new to this channel, what to do here at Right Way Traders, we explain, I'll give out the realistic view of trading Forex in the perspective of a retail trader. So like this video and share it to anybody you think is going to be helpful to, okay? And so this playlist that you are seeing, this is video number 4 in this playlist where I break down Forex trading for retail traders, explaining everything to them. The very first video was how Forex trading works. The second one is why traders lose money. And the third video, which is the previous video we just made, the 3 main ways to invest in Forex trading, which is by signals, by learning trading and trading yourself, and by account management, which is copy trading. Okay, so just go back and watch that video, and if you want to invest in Forex, make sure you watch the video and understand which one will suit you. Check the pros and cons of it. Okay, so that being said, this is the last video in this playlist, which will be definitely explaining what Forex is trading is to newcomers. So we are talking about the profitability and the expectations that Forex retail traders are supposed to expect. So that being said, let's dive into it. Let me start with this question: is it possible to make money from Forex? The answer is yes, definitely yes. You can make money from trading Forex if you are doing the right thing. That is, if you're doing the right thing, if you have a structure, a trading structure, and a trading plan, they work together. If you are doing the right thing, you will definitely make money on the long run in Forex. Why did I bring this up? Because majority of Forex traders, they lack structure, they lack trade plan, and so they are doomed to fail on the long run because they don't have either of this. Like I explained in previous video on why traders lose money. So if you have structure and you have a trade plan, definitely on the long run you are making money. But how much are you going to be making? Which is why this video is here. Research has it that about 90% of traders, they lose their money. Okay, that's the research that people conducted on forex brokers and see how many people are actually profitable from it. About 10%, only 10% make money. The difference between this 90% and 10% is this thing that I just see here. That is the difference. The 10% traders are different from the 90% traders that trade without structure and without a trade plan. That is why they are doomed to fail already. But if you are part of the 10%, okay, you have a structure. Having a structure is having a trading strategy that is being tested and seen proven to work. A trading plan is your plan that you have towards using that strategy. Okay, we are not talking about trading plan today, but these are the main things you need to have to be profitable. Okay, now let's say you are profitable, you are part of the 10%. What then can you be expecting going forward in trading? Now, coming into forex trading as a new trader, you encounter account flippers. Account flippers are people that just deposit very small amount of money in their trading account and they tend to flip it by 10 times. Okay, very possible in trading, but you need to be aware of these people and their method of trading. This is not the conventional way of trading and it's very dangerous. Account flippers may deposit $50 in their account and they will trade it up to $500 within a week. They can achieve that, or even $1,000. Okay, this is a very dangerous way to trade. Meanwhile, this is one of the things that lure people into forex trading already. If you see that your neighbor, your friend can do this, you want to do it, that's why you're going into forex trading. But this is the wrong way to go, guys. This is definitely not the way forex trading works, because if you are the type of person that flips accounts, it happens once in a while. Account flipping this account to this is 1:10 ratio, risk to reward ratio. Okay, 1:10 risk to reward ratio. it happens only maybe 5 to 10% of the time in the market. So most times you'll be losing your money. It's not even a practical conventional way to trade because you can't even track your previous history like a normal standard way of trading. Okay, so avoid account flippers. That's the first part. They will always deceive you into fake realism of forex trading. This is not the reality of forex trading. Flipping accounts is never the way to go. Now, the conventional way to go, which is what I want to show you, the realistic way to trade forex, I'm going to be using a trading system to explain this. Now, going back to the question on the profitability and the expectation. Now, depending on your type of system that you're using, your profitability will solely depend on your risk plan, your trading plan, your trading strategy, everything combined, which are very, very various, very, very diverse. So many people have different strategies, different risk plan, different trading plan. So I cannot just give a particular trading expectation, but I'm going to give a very realistic one, a trading system. I'm going to just draft it out here, and what you will see how much you can be making from such system. Let us say you have a good trading system that is structured based and a trading plan. Let's call it the RJK system. Okay, let's use this system and draft the realism or the expectation in trading forex. Okay, let's say this trading system gives you 10 trades every month, 10 trades per month. Okay, every month you are gaining on average 10 trades from this trading system. And let's say the win rate on this system is 50% win rate. Okay, which is very, very common. You can get 50% win rate in a trading system. It's very easy. Is a very common thing. Most traders have 50% or lower or a little bit above. On the long run, this system produces 50% win rate, and let's say you risk 2% per trade. Okay. Lastly, we are going to add your risk reward ratio. Risk to reward ratio will be 1:1.5. Risk to reward ratio means how much you are gaining compared to how much you are losing, you are risking. Okay, if you risk 1, you are prone to me. If you hit your take profit, you make 1.5. If you hit your stop loss, you lose 1. This is what risk to reward ratio actually means. Okay, let's say this is the trading system that you're using, and these are the variables, these are the data from this trading system. Okay, it's a very realistic trading system in forex trading. Okay, and how much can this trader make using these values that are here? Let's explain. Now, if you are gaining 10 trades every month and your win rate is 50%, it means you win 50% of 10 trades, which is 5, and you lose 50%, which is 5. Okay, in a month you took 10 trades. Trades is equal to 10. Okay, and you won 5 of it, which is 50% win rate. Okay, now your risk on each trade is 2% of your trading capital. Okay, and your risk reward ratio is 1:1.5. Okay, which means if you are risking 2%, if you lose 2% for each trade, you win 3% for each trade. Okay, so using this risk to reward ratio of 1:1.5, your winning trades will give you 2% multiplied by 1:1.5 is 3%. Each trade will give you plus 3%. Okay, plus 3% multiplied by 5 trades will give you 15% profit. Okay, from taking 10 trades in that particular month, you made 15% profit. But remember, you also have 50% loss. Okay, 50% loss. That is 5 trade won here and 5 trade lost here. So you lost 5 trades. Okay, and each trade, since your risk to reward ratio is 1:1.5, each trade you lose 1 of 2%. 2% per trade multiplied by 5. That's going to give you minus 10%. Now, this is the loss incurred during this month of trade, right? This is the total profit made, excluding fees, commissions, and charges. Okay. Now, if you minus this from this, you gain a net profit of 5%. 5% trading return. This is like an average net profit for a trading system that has these informations here. Okay, an average you make 5% a month. If you get average of 10% and your win rate is 50%, If you get average of 10 trades, sorry, and your win rate is 50%, and you reach 2% per trade, and your risk to reward ratio is 1 to 1.5, a very realistic way of trading in forex trading, you'll definitely be making average of 5% per month in that trading account. Now, some of you will say that this is actually too small to make in trading, but this is a very realistic way of trading. Now we're going to use another example. What if you want to make more than this? What are you supposed to tweak in this your system to make more than 5% trading return in a month for this same system? What are you supposed to tweak? Before we do that, let's talk about the drawdown encounter. Okay, in this kind of trading account, you take 10 trades in a month, okay, and you reach 2% per trade each trade. Okay, the maximum drawdown is the maximum limit of loss you can encounter in your account. Okay, the maximum loss you can encounter in this outcome, which is practically almost impossible because you can take 10 trades, okay, and you may not lose 10 trades at once. But worst come to worst, if you lose 10 trades in a single month, if you lose all of your trades, which is 10, worst come to worst, the maximum drawdown will be 2% per trade multiplied by 10. Drawdown maximum will be 20%. Expected maximum drawdown. Not realistic though, because you cannot lose all 10%. But in details, in case you lose all 10%, you can never go beyond 20% drawdown for that month. Okay. Now, why am I bringing this drawdown? Because there's something you need to tweak here to increase the amount of trading return per month, and it will definitely affect the drawdown. Let's tweak it and see. So you're basically saying 5% is too small for you to be earning in a monthly basis. What are you supposed to do to earn more in a trading system like this? You take trades per month, total trades equal to 10 trades, okay? Win rate is 50%, so you want 5 of it. You have to increase your risks, okay, in order to increase your total monthly target. Let's say this risk, we are going to increase it from 2% to 5% per trade, okay? Risks 5%. So how much are you going to make if you increase your risks by 5%? Let's calculate it. Let's do the math. Remember, our risk to reward ratio is 1 is to 1.5, okay? Now, 5% per trade risks, you make 7.5% in each trade, okay? Now, 7.5 multiplied by 5 trades, which will give you, the return will give you 37.5%. Remember, you lost 5 of the trades, so the other 5, you minus 5% for each of the 5 trades, which is 5 multiplied by 5, 25% loss, okay? In summing this up, your total net profit will be plus 12.5% return, okay? Now, you are making 12.5% return in a month just because you change this value from 2 to 5. You increase your risk from 2% per trade to 5% per trade. Now, this is going to affect your maximum drawdown. It will no longer be 20% maximum expected drawdown. Okay, now it will be 5 multiplied by 10, which is the maximum expected drawdown, worst comes to worst, which is going to give you 50%. You see the danger of this? So you may lose 50% of your account if you lose 10 trades at once, but you are prone to make a net profit of 12% every month if you keep this trading system steady. Remember, this is just a realistic example of trading forex. Let's talk about the third one. Let's say it is still too small for you, but you want to increase your risks again to, let's say, 10% per trade. Okay, still under the same system, you want to increase your risks to 10% per trade. What is going to be the outcome? To 10% per trade. Okay, now your outcome is going to be different here, and your drawdown is going to be affected too. So why people use low risk is because they don't want their drawdown to be much. They don't want to lose much of their account. So they use low risk. Risking 10% per trade, you want 5 out of 10. This is plus 75%. Now you lost half of it because your win rate is 50%. You will lose 50%. Now to sum this up, it will give you plus 25% net profit every month if you risk 10% in this same system. But what is the maximum drawdown going to be like? The maximum drawdown is going to be affected again because you are risking 10% per trade. So if you lose all trade, you are going to lose 10 multiplied by 10 minus 100%. So you are prone to lose everything if you lose all the trade when you use high risks like 10% per trade. Okay, so going forward, this is the realistic view of trading forex, but the best approach is to maintain the 2% risk, okay, because that is very healthy psychologically, and on the long run it's to still make you money. Okay, so your risk should always be around 2%, especially as a beginner forex trader. I'm going back to what we calculated in that previous one. Okay, let's stick to the 2%, okay, because that's very realistic. 2% per trade, okay, then your expected maximum drawdown is going to be around 20%. Now your average monthly profit, 5% gain, maintaining this structure, this trade plan, maintaining this data, okay, it's going to give you this. You may be thinking that, oh, this is too small. If you multiply 5% by 12, it is going to give you 60% net profit for that year, okay, excluding compounding, because it's going to be compounding every month. If you are compounding, it's definitely be more than this, maybe 120% around there, okay, in that year. So ROI, practically this is already more than what average Americans they get from the S&P 500 market. Okay, on average S&P gives around 8 to 10% yearly return. So trading forex already is giving you, guaranteeing you something that is paying more than this. Okay, this is a realistic return in America. The S&P 500 stock, okay, the top 500 companies in America, the stock exchange, it gives you this average yearly return. But in forex, you can make this within 2 months. Okay, so making 5% in a month is very realistic in trading, and one should maintain that if he's already doing that. Avoid account flippers, those people that are flipping account. There's no pride in blowing your account. Always trade, go slow and steady, okay? That's the main way to be consistent in this business. Remember, it's a side hustle. If you think that your profit is too small, then you are going to increase your capital. Now, let me explain how increasing your capital is going to be positive towards making these profits. This is why capital is important, which is your power. This is why it's important. So let's say you're making monthly return, monthly plus 5%. Okay, if your trading capital is $100, that 5% is going to give you $5. Okay, if you increase your trading capital to $1,000, it's going to give you $50 profit. If you increase your capital to $10,000, it's going to give you $500 profit. You see, this guy is already making $500 in a month, and you're making $5, trading exactly the same thing. Now, the capital could be your problem. If you think that your monthly percentage return is small, then you need to increase your capital, or you go for prop firm trading. Prop firm trading, okay. Now, this is a very tricky one. Prop firm are companies that gives you funds to trade, and if you pass their challenges, they give you real fund to trade and you split profit with them. Okay, now there's a trick to it. There are some mathematical manipulation that you may not understand, but when we'll be talking about the prop firm video, we'll explain that. Okay, now trading with $100, you can go with that, but if you want to be trading with $100, you shouldn't be risking this amount, okay, because you practically be making a little amount of money. Your risk should be a little bit higher. Maybe you risk 10% per trade in trading accounts like this. So if you are risking 10% per trade, remember I'll say you make 25%. If you are risking 10% for this system, it will likely give you $25 instead of this $5. So trading smaller accounts require you to increase your risk. Trading higher account require you to maintain risk of 2%, because you're making consistent high profit here. This is how capital actually affects your trading growth. All right, guys, that will be that for now in explaining the profitability and expectation in forex trading. Remember what I said, for you to achieve this, you need a trading system like this, something like this, I need a trading plan. You don't just trade randomly or trade someone else's signal. You need something structural, tested and trusted already to make a consistent return like this. That will be the last video in this playlist, which is explaining forex trading to retail traders. Okay, on our next playlist, which is the project I'm going to be working on, is forex terminologies. Most of the terms like spread, pips, leverage, loss size, stop losses, take profit, all those minor terminologies that you may not be understanding in forex trading, I'm going to break them down, explaining them and how we use them in forex trading. So if you've watched this end, if you watched this part of the video, make sure you like it and subscribe to this channel so that whenever I post, you will receive videos like this. See you guys on my next video.